Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.
Welcome back to another episode of the Tech Behind FinTech. I'm your host, Nnamdi Oswagu. Joining me today is Kony Kwong, the CEO of GAIB. Kony, how are you doing today?
Doing great. Thanks for having me. How are you?
I'm doing wonderful. I'm really excited about today's topic. As you can see on our screen, today's topic is the AI gold rush, why GPUs are the new financial frontier. Very, very interesting, novel topic we're going to get into. A lot of you might not even understand what any of that means, and then we were going to help you throughout the show understand it. I'm here with an expert who is pioneering this market sector. Before we jump into it and I introduce my guests officially, let me do some housekeeping. We are streaming live from Facebook, LinkedIn, YouTube, and we have another stream going from Instagram on the phone. So if you're on Instagram, go to the techbehindfintech.com and you can see exactly who I'm talking to instead of just looking at me solo. And on that note, let me officially introduce my guest. Kony is the CEO and co-founder of GAIB, the economic layer transforming AI infrastructure investment. Prior to GAIB, Kony worked in asset management and investment banking with experience across private equity, credit research, and SPACs. He later joined a crypto exchange focusing on mergers and acquisition. Combining his expertise in finance and technology, Kony founded GAIB to reshape investment opportunities in AI infrastructure, making it more accessible and opening doors to technologies that will drive the future. Welcome to the show, man. Look, wonderful background. And before we get into it, because we were talking about this before the show, your company GAIB, where does that come from?
Well, yeah. So, Lisa now GAIB, if you know the name, then it means that you're a fan of Dune, same as me and also our co-founders here. Because when we had the idea, like when we look at Dune, of course we like aesthetics, we like the universe, and we like lore. But more importantly, is that what Dune movie and the universe actually mirror to our AI era, the world that we're living in. Because if you look at the most important asset in Dune, which is spice, it actually compares to compute power in the AI era, which is the most important asset there. So that's how we borrow the concept. And the second thing is, GAIB actually means three things. It means like GPU, AI, blockchain, or bond, meaning that we are doing the financialization of these GPU assets. So that's how we borrow the concept between like Dune to call ourselves the name of like GAIB here.
Love it. Absolutely love it. That's pretty, because I watched the movie. I'm a fan. Obviously, Dune before the recent movie has been the concept of the show's been out for a while. But when you told that to me, I totally remembered. And yeah, it makes total sense. And the spice, that was their main commodity that they would trade interplanetary. So
Correct.
pretty cool, man. I love it. So let's get into it. Let's take a step back, right? And help people understand, everyone right now, AI is pretty ubiquitous. Everyone's talking about AI. They may not understand what is powering AI in terms of the technology needed that, a lot of companies are need, that's pretty much the infrastructure. So, can you help us understand what GPUs are and how important that is to AI infrastructure?
Sure, I would love to. So I think most people here would have heard of like CPU, right? So your computer has a CPU, your phone has a CPU. So CPU is like end of the brain, but it runs more like in just one line. And then for GPU, they're more like the full name is called graphic processing units. They're mainly used for in the games, in processing graphics. That's when I think 30 years ago, when computers started to have like graphic user interface, where we control the computer not only by command lines, not only by typing codes, but we actually can have clicking, can have like all these like UI displayed there. So that's where we need to process all these different types of graphics, and GPU came to this place. And they're known for doing parallelization of computation, meaning we not only have one people doing one calculation here, but you can actually have 10 workers doing the same time. So that's how you speed up the computation and allow a computer to process all these super complex graphics there. And after a while, why GPU links to AI here is because we realize that when we do AI computations, we actually need to have a lot of like parallelized computation in order to make AI models work faster. So that's how GPU became a hit after AI was a major thing in around like 20 years ago. So what is GPU? So as I mentioned earlier, it's an asset that produces like computation power. It is similar to a generator that generates electricity, which can power up all the electrical appliances. But then for AI, these are models. Like they are essentially just a function. We learn in math, right? X equal to Y plus something. That's a function. And exactly the same thing for every AI model out there is essentially a very complicated and complex function that actually give you the answer. Right now, we have in AI era, we have a lot of things called LLM, large language models. We used to have language models only, and then slowly we have large because they're essentially very large. For example, we have like a function is like as I mentioned earlier, y equal to x plus c, which is like a simple function, linear function there. But then for AI LLM model, it is way complicated. You can have like a power to maybe a power to 10, or you can have a lot of parameters, x1, x2, x3, x4, can go up to trillion parameters there. So it's a really complicated function. And in order to calculate that, you need to have a lot of compute power. And that's where these more advanced GPUs come into place here. So if I have to give a very simple analogy, like how AI models, GPU compute they are, it's like this. So GPU is like your heart. They keep on pumping the blood to the brain, which is like giving you the knowledge, allow you to think. AI model is just like human's brain. GPU is a human's heart. They keep on generating compute power. They can power up your brain. So that's like the simple analogy that I would like to explain, like what is GPU, what is AI model, what is computer.
No, I absolutely love that. I think that's a really clear explanation of GPUs. I've heard different analogies, never heard that one. But if we think about it, like you just said, right? The GPUs, that's pumping the heart. The brain, that's the actual AI model. You need your heart to pump in order for your brain to function. That's a fact. So the problem though is that pumping of the heart is really expensive.
Yes.
That price to get the actual that infrastructure is extremely expensive. So the barrier of entry for a lot of companies in this AI space, they need a lot of investment dollars to power that heart. In other words, right? So I like your analogy with that. So with that said, right, you figured out a way to take this GPU and tokenize it, make it an asset. How does that
Yes.
work?
Yeah. Usually for now, the reason, okay, let me take a step back, like why we do this, right? So, a lot of the time when we think of like AI, what to invest in AI, the first thing that come to our mind is always about Nvidia stock, like buying Nvidia stock on the stock market. But what if we can actually invest in something more like at the bottom level, the asset that empower the whole economy? Well, there's no way we can do so because, as you mentioned, these GPUs are super expensive, especially at the enterprise level. Like, how expensive can they be? While one simple graphic card, like GPU, can cost like 30,000 US dollars. For example, H100 it costs 30,000 US dollars. For normal people like you and I, like number one, we may not have like that capital to buy one. We may have that capital to buy one, but we may not have the capital to buy 1,000, which is needed to have like a functional cluster of GPU, a batch of GPU to make it powerful enough to serve the end user's needs there. And to put into context, like how much we need, to make a more reasonable, more industrial grade or production level of like size here is that usually requires a few hundred to 1,000 GPUs, and 1,000 H100 GPUs or H200 GPUs, which are the more latest model by NVIDIA, they cost around $30 million or above in order to just buy the GPU. And let alone you have other costs of networking, servicing, hosting, electricity, all the utility costs there. So it's very hard for anybody like you and I to invest into the asset itself, right? So, but what if we have a way to break down these assets, make it into smaller pieces that anybody can now invest without have a minimum criteria here. So that's exactly what GAIB is doing, is through financializing and tokenizing these GPUs. We break it down into different pieces. Let's say 30 million worth of GPUs now can be made into 30 million pieces. So essentially each piece only costs $1. And anybody now can own like as many pieces of the whole GPU clusters as you want. And what do you hold these pieces for? Well, you're entitled to the future revenue that made by these GPUs. So essentially, you're investing in the GPU, getting whatever they generate, they make, and you share a cut. So through this way, through the tokenization and financialization, we actually allow anybody to invest into these GPU asset class, as I mentioned earlier. So we break it down into pieces. Of course, like the $1 is just for reference here. In the actual cases, how we do it is a little bit more complicated, but the concept is here. We break it down into pieces. People can buy the pieces that they want, get the exposure into these like asset class.
So it's really interesting because I've never heard of this particular model for GPUs. I've heard of another business model. A friend of mine, we were talking about in terms of within a facility, right? Buying your own server for collection of people, and you'll have your server, and then so it's almost like having a tangible real estate asset, and whenever that server is used, you'll then make money on it. But you and your collective own the whole thing. So in how you're tokenizing it, is that for the average investor like you and I, or is that more for institutional? Like how would people actually go about investing in it?
Yeah. Our goal is to actually make it as open as to anybody. So we don't differentiate who's buying it. Like it can be institution, it can be any people like you and me, because the minimum entry threshold is not like $100,000. It can be like $10,000, a few $100. Like you just buy the portion of how much you want. Let's do it this way. If GPU is 100%, it's just like a share, right? So it's 100%. You can buy 1%, you can buy 0.1% to the amount that you want. So essentially, whatever that $100 being made, you get a portion according to your ownership of the GPU that I mentioned earlier. And if that's an institution who put in a big chunk, let's say they put in half of the size, 15 million, 20 million, to just take half of the whole the revenue or ownership of the GPU, and whatever they make, they also take half. So through this way, like through fragmenting it or breaking it down into like different tokens, we actually allow people to choose, number one, how much they want to participate. Number two, like what is like to make it easier to lower down the threshold of participating in this asset class here.
So it's very interesting. Another question is, and it's the same question I had on the other model in which you're actually getting your own server with your team. How can you guarantee that your GPUs will be used? Because you can own it, right, and have an investment in it, but what if it's not utilized? Because the only way I would assume you're going to get a return is if a company or uses it and then pays, and then you get that portion. How does that work?
Correct. So that comes to where the model differs between the two. So for your model that you mentioned is you own it, you can use it, yourself, right? For your team, like even for somebody else. And then on our side of model, because we are dealing with most of our partners are usually neo clouds or data centers, they're professionals in this area. And when we actually do the model with them, we have a one prerequisite, which is two prerequisites. One is they need to have the GPUs. They can come to us and say, hey, we want to build this. Can we tokenize it first before we buy the GPU? No, we don't do it. The second thing is we actually require them to have a client, which is paying them money. So there's actually cash flow attached to this GPU. So essentially, you can come to us and say, hey, I have 100 GPU. Can we tokenize it now? Well, at this time, we don't do it. We actually prefer to only tokenize it with the cloud companies or data centers with the GPU and also with the client. So this can make sure that you as a buyer or you as an investor in this like tokenized GPU, you can actually have a more foreseeable cash flow that going to you. So that's how we screen or select the people that we work with.
Okay, so that makes sense. I like that. So, you have a situation now. So if I'm the cloud provider that has this data center, I have a client already and I have the GPUs. Those are your two prerequisites. Then you tokenize the GPUs that are already being utilized for this client. With that additional funding, I can go buy more GPUs and get more clients. That's the way it works.
Correct. Yeah, you understand perfectly. Yeah.
Okay, cool. So that's the incentive for the provider. So, there are major players in this game, right? Like we talked about the elephant in the room, NVIDIA. How does that process work? Like, do you, you're not they have the products already. You're not necessarily competing because other companies are leveraging their products. So in that same reference, it's not really relevant, right? In terms of they're just a vendor from your perspective. Is that correct? Or
Well, yeah, they're a vendor, and also they are one of the key part in the supply chain. Because you as a you as a cloud company, you need to buy from the NVIDIA's GPU through the authorized seller or through some OEM or DMs of NVIDIA, but you need to pay money, right? So in order to get capital, there's several ways. You can get capital from more traditional means, by going to a bank or going to private credit, private lending there. So there's more like debt financing. You can do your own equity financing, raise money from VCs, raise money from the other private credit guys, or sorry, private equity guys, and you can maybe you're rich enough, like you can use your own balance sheet money, you can use your own profit or revenue to buy the GPUs yourself. But then for most of the cloud company out there, it's actually finding it very hard to get access to the traditional finance capital, either banking, either like private lending, because the market is pretty slow to understand the unit economics of GPU. Like a lot of people just you don't know the asset, and especially after 2008 financial crisis, a lot of these like banks are pretty conservative in terms of things that they do business with. So that's where the gap exists and where we come in. We can be additional like funding channel for these cloud company because we understand the market, we have the expertise. Like a little background about other than me and also my co-founder is my co-founder runs a cloud company himself, and then his family runs like a semiconductor company globally. So we have the unique like network in the market to understand who are these cloud companies and and who are their clients. So they can treat us and hey, we have 2,000 GPUs or 20,000 GPUs because immediately we know whether they are bluffing or not. And also we have the relevant like connections to do our own DD work here, which is a unique advantage against others. And also we understand how much these GPUs make. If you tell me you have a contract for $5 now, well, we immediately know that may not be true because we know the market prices. We are in the business every day. So we have the understanding how like GPUs return changes according to market sentiment, changes according to the supply and demand side there. So that's why we can underwrite this way better than the other people in the market. And that's also our advantage and also why we can fill in the gap in the market to be the one giving the capital to this cloud company there.
It's really interesting. A couple of things as you were talking, I was thinking about. Um, it's like you're building your own commodity trading system in a sense, right? But instead of
Correct.
spices, it's GPUs because you just mentioned we know the prices and the fluctuations throughout. Like, how do you keep your finger on the pulse of that?
Yeah, yeah. So you mentioned very right. So we're trying to build a standard and also build open the markets. Because to me, I think um, right now for trading like GPU, like, we have a commodity market for everything. Orange, even like gold, like of course like the major metals, right? Gold, platinum, silver, like corn. Even corn has a like commodity market, but we don't have one for GPU asset. Like how impossible is that? Which is because they are the most important asset in the AI era. We don't even have a market for trading it, for tracking the prices. And you asked a very good question. Like, how do we know like the price of GPU? Well, it actually comes from the interactions between us and also our cloud partners every day with the client. The market is not so transparent. Like you have to go through a bidding negotiation process, like talking about the GPU prices. But because we have such a fast network of the cloud companies out there that we're working with, we can easily get a sense of how much GPU per hour rental price in a certain region, how they compare with, let's say, the North American counterparts there. So we have all the data. So that's why we can do the pricing way more correctly than other people, and we can um, do the structuring of like the deals that better than others. So that's a unique advantage we have. It all boils down to how much information that we can absorb like, as a company here. Um, and we tend to open them up because when more and more people trading, participating in the market, the price will actually be determined by the market force. So that happens with any other markets out there. For instance, when we were doing like gold trading back in the days, gold is also very opaque. The prices, like when we don't have like all the gold ETFs, gold futures, it's hard to like do the trading. You might have some exchanges offline doing it, but the price is being reflected immediately was not that quick. So what we want to do is ultimately tokenizing the asset on-chain is one of them, but opening up other markets like trading markets, future markets, options market, even structured product markets, all the things that we want to do because we want to bring this economy to a next level to where gold was happened. After gold got like ETF approved, got the other option futures approved, the economy just exploded. So we want the same thing happen to these like most important asset of GPU in AI era, which we think they're gonna stay no matter what. If we believe AI is here to stay, they are here to stay.
That's fascinating because as you were talking, I was saying, is that the next step to like bundle these ETFs in things like ETFs? I mean, bundle these GPUs and things like ETFs in futures. Basically, you could even start looking at it like you would look at bonds and things of that nature. Like as you were talking, I was seeing that. Also seeing different tranches of GPUs and things of that nature. I mean, you're taking traditional things that's been done in investment banking and you're applying it to GPUs in this new AI era that we're in.
Yeah, yeah, that's the whole thinking because we don't want to reinvent the wheel. We take reference from what happened with other markets. Like, because if you look at GPU as an asset class, that would be the route where like there will be financial markets, there will be different economy around that if they are big enough, which they are already big enough. It's just the market doesn't understand it yet. Because if you look at how much like all these big tech companies are investing into AI infrastructure, it's $1 billion now, and you'll be going to be $1 trillion market. Like Magnificent Seven investing $300 billion every year into AI infrastructure, and the other tech companies outside of the US they're aggressively investing in that. Like look at what UAE is trying to do, like what the UAE Stargate program is trying to do. Like US Stargate is 500B, UAE is way bigger. And I do think this will happen to other countries because ultimately, if you want to have a safe, efficient, and low latency of like cloud services, you have to be localized. So that's why in our network, we're seeing more and more regional and localized cloud company being set up to fulfill the regional and local countries' demand there. And also there's like privacy issue, sovereign cloud issue there. So it's going to be way bigger, the market, than what we're seeing. The old way of like AWS, GCP, Azure, like dominant market may be gone. Like we're seeing more localized version, newer competitors mainly be targeting like AI services will come up, and they have already come up. And eventually, if like AWS, GCP want to, of course, they have their unique advantages because they can cross-sell you other services. And when they still need to have more dedicated AI power, AI compute power service there, they're going to aggregate all these local players. So it's a very interesting market and dynamics that we're seeing. More regionalized, localized cloud company being come up, more specialized in terms of services they provide, and also more localized the AI application companies that come up. Yeah, so we are at a very good intersection of the market where we see it's going to go into an exponential growth phase pretty soon.
I mean, the reason why you would see the major players, the three big ones, right? Microsoft with Azure, Google with GCP, Amazon with AWS, is because the barrier of entry is humongous. It's just so much to get in that space in terms of cost. So it prohibited the local regional players until you have this new age now in which if more funding can be available, then you can see that rise. And I guess that's one of the problems you're trying to solve.
Exactly. This is exactly the problem we're trying to solve. And the other thing why these like newer players will come out against like big AWS, GCP is that when you actually want to service these AI companies, like there are a new set of tools that you need to set up. Back in the days, AWS is known for allow people to run CPU, allow people to do storage, allow people to host a server. They're good at doing that. But if you're talking about a lot of these like more unique AI criteria or AI like service requirements, you have to be adaptive, and small companies can do it better than the bigger cloud. So that's why they gain like some of the new contracts for the AI companies there.
You give us some examples of some of those unique differentiators from traditional AWS versus some of the regional AI plays that you're mentioning?
Yeah, for example, I'll give you an example, right? So in the States, the bigger like non-top three cloud is like CoreWeave, Crusoe, Lambda. So every day they would just receive a lot of requests from the AI company say, hey, can you give us these API? Can you have us host this newest model to your platform? Like, can you give us a dedicated instance where we want the latency to this low? We want to train the data for using these X amount of GPU for how many hours? Can you just segregate that? Right, you have a lot of like bespoke requests to the neo cloud companies. So as a smaller company, as a like newer cloud, you can service these requirements and demands like better than like the bigger organization there.
It makes sense. I mean, if we look at it like banking, sometimes when you're dealing with a bigger bank versus like a personalized, banker who can actually fulfill your needs, it's just more of a customized service.
Right.
And I have some other questions. It's going to be a rewind, but I actually that afterwards. But my next question is, you mentioned due diligence. What is your due diligence process for these cloud providers in terms of, establishing that tokenization that you're going to? I know you mentioned the two prerequisites. Number one, they have to have a client, and number two, they have to have the GPUs in place. Client thing is broad. Like I'm just an example, right? I could be a local cloud company. I could have a client and my contract's about to expire, I don't know, in 6 months, right? I get the money, right? But then after the 6 months, I don't have a contract anymore, hypothetically. Like, what's your process like?
Yeah, very good question. And doing this is actually the toughest part, like, and it requires like expertise. So in terms of our process, what we do is we have like two-stage approach here. So when you first come to us, we have a prelim like questionnaire asking you some brief information. Number one, what's your founding history? What are your GPUs? What is the vintage? What are they used for? Where they are? How much they're worth? and also who's your client? Do you have a contract? So just pre-premium, and how much like capital you want from out of us, right? So if everything passes, like the two prerequisites that pass, like, as I mentioned, then we perform a deeper due diligence on the company. Now we have to truly understand several things from the company's financial background. Do they use leverage? Do they get loan? How much equity they have raised? To how much cash flow they earn? To how much GPUs they have? How long they have been used for? And also what is like the asset value there? And sometimes we also sometimes we need to have like third party to help us do the commercial diligence. These can be big four audit firms. They can be the other like auditors there. And also regarding the asset value, we have like third party doing the asset appraisal. If they're only worth like say $150, the amount of capital that we're going to give to this cloud company will not exceed that, because this is like that much asset value that they're worth with, they're worth of. So that's why we have to perform more independent, having a third party to do more independent research and evaluation on the asset value, which will serve a pretty strong foundation for us when we actually do the money structuring there. And after like this commercial due diligence passed, asset appraisal passed, and also we also have to check the client. So they have to show us the contract, like how long is the contract, how long they are being last for, what was the duration left, and also how much they're charging, what is the return rate. So to understand the whole like cash flow of these clients paying them, even do they have a good track record of paying money, are they delaying it, etc. So when we get all this information ready, then we can do the structuring and pricing. For example, if you have $150 worth of GPU, just to quick example, $150 worth of GPU, then we can maybe give you $100 worth of money there. So essentially, the money that I give you, they're over collateralized by the GPU's value. That's number one. The second thing is we also need to check your contract. So if the contract is 24 months, then we don't give you money for more than 24 months, because we want to make sure that within this time frame, as you mentioned, right, within this time frame, my money can be covered by the cash flow there. So these are like the two protections, or two lines of protection that we have when we actually give the money to the cloud company. And afterwards, after we finish the structuring and pricing, they're okay with it, give them money. We still have ongoing monitoring of the GPUs, where through telemetry, through like having access to the actual GPU there, we can actually keep on checking it, like where the GPUs they claim to be in Thailand. Did they get moved to Singapore? If they do, then we have to know what happened. So we can through over the network, we can track like the IP addresses of the GPU, how much they're being used for, so we can get access to the underlying GPUs there. So this is how we have like before underwriting, a full DD process, after underwriting, after giving the money, the full like continuous monitoring process, and our end as well.
It makes sense. A few questions with that, just to because the financing model. I'm a background besides technology on the side, just some real estate, so I'm pretty familiar with that. So like any investment property, the bank is not going to give you 100%. They're going to give you maybe, at maximum 75% loan to value. So you're doing that with your example for sure, right? If it's 150, you're not going to give more than 100. Do you, with the third party, do you do actual site visits to the facility where the GPUs are hosted?
The third party has to. So we're employing a third party auditor and appraiser to do that. Yeah.
Okay. Next question, because it's a physical asset, computer hardware that actually could be physically moved, right? You mentioned like, how do you prevent against that, or what's that process like if it's physically moved?
Yeah, so there's several ways. One is usually these GPUs are not being put under the cloud company's their premise. They're usually being put in a third-party data center, because they need to have a reliable network, and also to have reliable like service time there. So usually they're being put to the big data center there. So what we're going to do is we're going to sign like a tri-party agreement, such that the data centers who's hosting the GPU will know that the GPUs now are being pledged to us. So without our written consent, they can move it out. The second thing is, like, sometimes we do have some partnered data centers. We can request the GPUs to be put there as well. And then the third thing is about the telemetry, meaning we can get access to the GPU's endpoint because they're all connected to the internet. So we can have the remote access to the GPU and to run some of the script on our end to check the performance of GPU, the runtime, the IP addresses and location there. So these all the data we can have, we can use it to cross-check. And of course, other than these, like regular periodic like auditing would also require. So that's like a second line of events here.
Wait, I missed that last part, Kony.
Oh, the last part is about like on regular auditing by third party, doing the auditing to the asset. So that is the second line of the defense here.
A couple of things to help my clarity, right? So, and I like this synergy between real estate and the GPUs. In real estate, right? I have an investment property. I refinance it for a 75% loan to value. I say, you know what? I don't want to pay a bank anymore, right? They have a lien against my property and they could, foreclose me and eventually end up taking possession of the property, selling it or whatever. How does that work with what you're doing with these cloud providers? And they say, you know what, GAIB or GAIB, we're not paying you anymore. How does that process work?
Yeah. Luckily, this hasn't happened yet. So I don't hope that happens. Yeah, it's just it's the same thing. So we also has a lien to the online asset. So in case you say, hey, we're not paying. Well, right now, then we can have the control over the assets, and even on the end consumer's contract. We can either repurpose these GPUs to another cloud company to take over, or we can just resell it out. And the reason why we can do this is, as I mentioned earlier, we have a fast network of GPU cloud companies and providers. So it's easier for us to get to the market and find the right person to take it over, compared to maybe any other like financial institution who want to do this. They may not have the connections like us do. Yeah.
No, it makes sense, right? Like, the thing you learn in on the real estate side is like, look, banks are not brokers. They don't want your property. They want the money your property produces. So it's not like they want to take over your property to default. Actually, that's the last thing they want to do. So they don't want you to default at all. But in the event that you do, they have to make sure that they get their money back, for their shareholders and so forth. So totally understand that. No, I mean, look, I'm totally fascinated by what you're doing and this new market that you're opening up. Another question that I have, right? Because you got this great combination of understanding the financial markets with your background and also understanding, this market with GPUs, tokenization, crypto, and blockchain and so forth. What lessons can you take from the many financial catastrophes we had over the last 2 decades, like the '08 financial crisis, right? When, we saw a scenario in which the industry was taking bad underlying assets like these mortgages that the people could not possibly pay back, putting it in these huge tranches and defaulting on a global massive scale, right? So there's been different things throughout the financial, even the recent financial crisis when these regional banks in the US were just going under. What lessons in the last, let's just say 2 decades of various financial catastrophes happening in the industry can you take with this new type of market you're opening up with GPUs?
Yeah. Yeah, we do have seen like quite some like incidents that happened before in all of the places in all of the years. And I believe that the lesson that we take is risk always comes first, meaning that we have to make the risk known to the investor. That's the first thing. The second thing is we have to have a good risk control. That's why you were asking like, how do we, when we actually get a tokenized deal, what is our process? How do we analyze them? It is actually it actually needs to take quite some effort, like to understand the one that the cloud company that we're dealing with, the asset that we're dealing with, how much they're worth. So all the stringent credit analysis process and DD process is what we adopted. So that's why we don't work with anybody. We are very selective to work only with the one that we feel comfortable with, and they have like a third party to give the attestation to how much assets are worth and how whether they have capability to pay us back. So this always comes first. So we want to make sure that the money we give are actually in the good hands, generating cash flow. At the same time, we can give a reasonable yield and return to the ones who are providing capital there. So yeah, I think that's the key. As a new asset class, a lot of people might not understand that. That's why it requires a professional to understand the tools, to understand the asset itself, the AI industry itself, and also the finance industry itself to make this happen.
So when you're dealing in the financial industry, and the different asset classes from traditional investment banking, they have a ton of regulatory constraints that they have to abide by, and they have various government organization like SEC and so forth to protect the business, the investors, and so forth. What regulatory standards do you have to abide by?
Yeah, we work with the regulations if needed over the place. So for instance, when we actually underwrite the deal, we are actually doing it through regulated fund structure in the jurisdiction that they need to be. So for example, we're using like Cayman regulated fund structure to do this. So make sure that number one, if anything, so we still being regulated. So we work with the regulations in the industry that we operate in if needed to make this happen. So we apply the standard, we incorporate with the standard, and also we let people know like what standard we're adopting in this industry, in the country, in the jurisdiction they work with.
Okay, I understand. So it's region specific, depending, because I know there's certain things you have to do when you're getting money from investors. But in your case, it's not necessarily I'm giving you or wiring you money. You're dealing with synthetic dollars. Is that accurate? And can you just explain the idea of how people are actually giving you or giving GAIB or GAIB and I'm sorry, should I call it GAIB or should I call it GAIB? I want to know.
GAIB, yeah.
GAIB. All right, so I was totally mispronouncing it this whole episode, so I'm going to say it right.
No worries.
GAIB. In what way are people actually moving funds into your account to become an investor? How does that work?
Yeah, so we can take both Web2 and Web3 money. And for example, in Web2, we have like a proper fund structure. You can subscribe to it. You have to be fulfill any standard when you should do a subscription. For example, if in the States, for example, in the States, you have to be an accredited investor. For the other countries, they might have a similar standard that if you want to actually promote it, we have to confirm with those standards. So these are the things we do. And then for crypto-wise, we're also doing in a DeFi approach where we're taking the capital from people in the DeFi vaults. And at the same time, when these money flow off-chain, go to the cloud companies, they all go through regulated entities in the region that we operate in.
All right, so just to reiterate, right? There's certain rules in the States regarding to invest in different companies. What was it? It was I know for it had this whole crowdfunding. You have to have a certain amount of money in the bank, and they have to basically qualify you as, I think you mentioned, equity investor. So not just anyone can do it. You have to be qualified. So let's say hypothetically, someone had, with the record amount of Bitcoin is hitting all-time highs every day, and I'm sitting on that, right? Can you accept payment that way for an investment? They want to convert some of their crypto coins for this new investment opportunity for a different asset class?
Um, Crypto, we don't. So for Bitcoin and ETH, we don't support it yet.
Oh,
So yeah, we just support like stable coins or related assets right now. So if you want to do like crypto, you can do it in the other ways that you usually do. For example, you can go to other like exchanges that you're allowed to trade with. So we don't handle the crypto to like crypto to stable coins or crypto to fiat like those on off ramp or even like exchange there. So that's not something our expertise there.
okay. All right, so basically, however you get your, and when we talk about stable coins, it's a digital coin that literally will match the US dollar or some form of currency. It doesn't fluctuate in terms of like how Bitcoin could be 100,000 today and 80,000 tomorrow. It doesn't do that. I'm just giving some background for the audience.
Yes.
So once they have that, then they can go through the proper means to working with GAIB to invest the funds. Is that accurate?
Yeah, correct. Yeah. So right now we don't support like BTC, ETH. We don't support the other assets. Yeah, other than stable coins.
Totally understandable. Listen, no, it's the whole thing to me. What you're doing is so cutting edge, and I'm just totally fascinated by it. Like when I was reading it and prepping for this show, it was like, wow, guys are really gonna commoditize GPUs, and it's gonna be like you said, corn or oranges at a certain point because with the way the industry is going, we're gonna need more AI power, more AI companies are being built. People are doing things even faster. Existing companies are doubling down on their investment. New startups are popping up every day. So I think it's totally amazing the work that you're doing. And I definitely want to keep in touch and just keep my eye on the progress and so forth. What is this industry landscape looking like? Like, in terms of you're the first company that I've heard of doing this. Are there other players in the market?
Um, there are other players in the market. Yeah.
Okay.
So I mean, it's a big market, but we're one of the earliest to promote and advocate for these new asset class because no, as I mentioned before, we saw the gap in it, and we also saw the opportunity for these assets to be a big commodity market. So that's why we have been promoting about like GPU tokenization, GPU markets, um, from last year onwards. And suddenly, like more and more people actually realize, oh, it actually is a big market, and they want to participate. But it's okay because in the market, it's just big enough. The one who actually we can still get a pie out of such a big market. And also, what our goal want to be is we don't. I don't think there's one company can monopolize like the whole market. What we want to do is as we are one of the earlier pioneer in this sector, we want to create a standard that people can follow. So in case like the ultimate goal is we become an open platform, anybody who want to participate in this sector, they can come. They can bring the deals that they want, the cloud companies they want tokenized onto our platform. They can bring the clients who want to invest in them onto our platform. So essentially, when it becomes as open as possible, when it becomes like everybody adopting it, then we are successful. So that's the angle that we want, like creating standard, opening markets, opening up channels for people to participate. Not only the one buying it, but also the one putting it onto the platform.
So what you're describing, right? Future later, you have this standard, and other people can come. Like the same way you have brokers for other commodities. I could come on the platform and pretend and broker a deal and say, I have this cloud provider that has a good contract. I can get you the resources and just put that deal together, leveraging your platform. Is that the future vision?
Yeah, may not be brokering, but it's just like a matchmaking. So just like an open platform where people meet together, right? So we just want to be the platform where information being shared, where deals being matched, and people who want to invest and people who get the money can actually meet together. So that's like the whole goal here. And also, as we can provide a standard, meaning anybody who wants to do the thing with us, they can be converting, even improving the standard that we have so that this sector can grow bigger.
I was reading about your company, and you had on a press release, there was a partnership with a company called Exhibits. Can you just
Yeah.
explain that for the audience? Like, how is that um, leaning towards your future goals and development? Like, how's that work?
Yeah. So we actually have a partnership with like other companies that exhibits. So what Exhibit does, or what other like similar company does, is that they essentially a GPU marketplace where they're the one connecting who want to use GPU and the one who has GPU. So it's good that they have like connection to both. Then what we do with them is essentially we can tokenize the GPUs either they or the partners actually have because they're making money. So they have the GPU. So we can collaborate. We can help tokenize the GPUs for them. And even when they have clients that have some needs, we have the GPU supply there because we have such a network. So it's like pretty synergistic relationship between us and also the other like, GPU marketplace out there.
Fascinating stuff. You've been gracious answering all these questions. I have a clearer understanding of what GAIB is doing and also this new asset class. So I really appreciate your time today. What we do at the end of our show is I'm going to give you center stage so you can talk about GAIB and how people can contact you and whatever else you want to talk about. So I'm going to get off stage and let you do that.
Thank you. Hey, anybody who's interested into GPU asset class, want to invest in this like commodity market, just follow GAIB at gaib.ai. We have a Twitter, which is gaib_AI. We have more products. We have more launches coming forward. So just follow us, check out our Twitter, check out our website, and even subscribe to our email newsletter there. So yeah, if you believe in AI should be the next big market and big era, so you should be following us and getting participate into this like growing market as soon as possible.
Thank you very much. For our viewers, really thank you for viewing the show today. We really appreciate you guys. We have a newsletter that goes out every single week to keep your finger on the pulse of what's going on in fintech. We're at techbehindfintech.com. I'm going to put the link here. Hit on our subscribe link, and this way you'll get updates on the fintech market, guests that we have upcoming, and it's free. So definitely it'll help you keep your fingers on the pulse. One of my friends in the works for a financial services organization, he uses our newsletter to for his meetings. So he's updating the news, he comes into his meetings, and it shows that he has his fingers on the pulse. So definitely subscribe. It goes out every single week. Other than that, Kony, thank you very much for your time today. To everyone viewing, we thank you for your viewership, whether you watch the show today, tomorrow, or next year. I definitely thank you for your viewership and all the messages, the comments, and different things. Tech Behind FinTech, we are definitely here, and we are happy to be here. Kony, also, man, listen, it's going on 1 a.m. in your part of the world, so I really, really appreciate your time today and joining us. Definitely, and thank you very much. On that note, to everyone, have a great weekend. We are out.
Thank you.
Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.